Hi guys, today is August 3rd, 2020 and futures pointing to a higher open as lawmakers are still trying to approve the $1 trillion stimulus package and earnings are reported and really good earnings actually, much better than expected by analysts by the most part, and it's pretty much a tale of two economies, and the retail, the leisure, the travel and leisure, the airlines, they're all struggling, but the tech companies are thriving. So let's jump to SPY, ETF for S&P 500, and I still have these support and resistance lines, and looks like we're gonna break out of this resistance line around $326 for SPY, and I think we're going higher actually. So let's jump to stocks, and before we jump to stocks, don't forget to subscribe to my channel, and also check out the Patreon link in the description of this video, and I think people who subscribed are really benefiting from this trading channel. Okay, so let's jump to stocks. So let's start with Caterpillar. CAT. So Caterpillar reported on Friday earnings of $1.03, beating 64-cent estimate. Revenue also topped expectations. On conference call, though, the company said that the dealer inventory reduced inventory by 1.4 billion, and expect this inventory to be reduced by 2.2 billion by the end of the year. And actually it expects the third quarter retail sales decline by 20%. So actually once the company reported the numbers, the shares surged like 4%, I think, and after that the company got on the conference call, and you could see that the shares were dropping and dropping, and all the gains evaporated, and actually stock dropped. So actually I would leave Caterpillar alone at $133. I think it's still a little bit too high to me, and I would let it drop to I would say middle 120s at least before I consider Caterpillar again, because the earnings, even though it looked good on the paper, but once they started talking on a conference call, it didn't look too good. Okay, so let's jump to Merck. So Merck reported a beat by 33 cents. Revenue was also higher, and raised full year forecast, 29% jump in sales of Keytruda. And I think Merck is a pretty good buy in this area, actually, in the $80 area. I think it's a buy to me. Okay, so MRK. So let's jump to the next company, which is CVX, which is Chevron. Oh boy, poor Chevron. I mean, I thought that oils were pretty much uninvestable except for Chevron and maybe ConocoPhillips, but now I actually take those two out of the equation, and oils are completely uninvestable at this point, because they're just losing money hand over fist. So they report much wider than expected loss of $1.59 versus 92 cents expected. Revenue was also below estimates. Like I said, I would just leave it alone, and I would be interested in Chevron in low 70s actually, if that comes down this much. Okay, so next company is Newell Brands. Newell is a consumer products company, earned 30 cents per share, 12 cents above estimates. Newell said that it expects to deliver a sequential improvement in its financial results as the year goes by. So Newell shares actually dropped after an initial rise in shares on Friday, and I think it's an interesting buy for me for Newell in this area, like $16 area. I think the shares may go higher after that. NWL. CL. Okay, Colgate-Palmolive. It's a consumer staple company, and it's beat by 4 cents. The revenue beat as well, driven by increased demand for soap and cleansing products. And I think Colgate is an interesting buy in my opinion, even though it's looking a little bit overbought here, but I think it's going higher. So if you want to do a quick trade, a couple of days trade, so maybe it's a good idea to get into the stock. Okay, so UA. Under Armour. A lot of people ask me about Under Armour. They reported a loss of 31 cents, smaller than expected. It was expected to report 41-cent loss, and revenue was also above estimates, boosted by a surge in e-commerce sales. But in general, I mean, I'm not very excited about Under Armour, and until we have a vaccine and sales improve, I would stay away from the stock. Okay, so for now, but I would keep an eye on this. VFC, VF Corp. The VF Corp is the company that produces the North Face. Lost 57 cents, smaller than 67 cents expected. Revenue was also better as stores reopened at the end of the quarter. Actually, it's not a bad idea to pick at VFC a little bit here in this area. I would rather buy it in like high 50s than 60, but in general, that would be an interesting pickup for me, because as soon as we have a vaccine, as soon as we have reopen of all the stores for VFC, and this stock may go higher. Okay, Apple. Okay, so Apple reported spectacular earnings, announced a 4-for-1 stock split, and shares are obviously higher, and I think it's gonna go even higher than that. It's trading at $432, around $432 per share pre-market. Even though they reported higher earnings and the stock jumped a lot, but I mean, it looks good, but it's just way too high for me. I mean, it's just way too high. I don't know. I mean, the shares may go higher, but I wouldn't be establishing a new position. I would let it drop a little bit, and if you want to buy it on a pullback at least. Okay, and we'll have a pullback sooner or later. Amazon reported even better numbers than Apple to me. They reported earnings of $10.30 versus the $1.46 expected. Revenue was also higher, and the earnings were the highest in company's history, in 26-year company's history. I actually think that Amazon is going higher, so I would say it's a buy. Simple as that. Okay, FB. Facebook beat expectations by 41 cents. Revenue beat as well, and they forecasted ad sales to grow this year, and that's despite the boycott by some of the key advertisers. But in general, Facebook also said that they're not advertisers, they're not a platform for big advertisers, those that are boycotting the company. They're a platform for small advertisers, small companies, and they have like 3 million customers, 3 million advertisers. So the boycott of like 30-40 companies doesn't make any difference for them. So the shares looks like will go higher at this. But just like Apple, I would wait for the shares to drop a little bit to establish a new position, because this is a little bit too high for me for Facebook. Okay, Ford Motor, stock symbol F. They reported a loss of 35 cents, less than $1.17 loss expected. Revenue beat as well, and they said that they have enough cash on hand for the remainder of 2020. You know, when the company says that they have enough cash on hand for the remainder of 2020, it doesn't make me feel very good about it, okay? Because I always question, what are you going to do after that? And you're going to do a secondary offering, and that's what it's in my mind immediately after this statement. So shares dropped, and I would just, I know it's a popular stock on platforms like Robinhood, but I would just stay away from this company. Okay, Shake Shack. Shake Shack reported not very good quarter, lost more than expected. Digital sales have nearly doubled, and in general, I think Shake Shack will be an outperformer once we have a vaccine, absolutely. But for the time being, I would leave it alone for now, and if it drops down to like low 40s, I would be interested to buy this. SHAK. NIO. Okay, so NIO reported July deliveries that were up 322% year over year, but down months over months. Company also said that it received record orders during the months of July. So interesting report from NIO, and actually I was pretty impressed with their latest delivery numbers for June and actually for July as well. So I actually think that NIO could be a good spec buy here. Okay, CCL. Carnival Cruises. Carnival postponed its plans to restart cruises of its AIDA, the Italian line, while it awaits Italian government approval to resume sailing. So I don't know. I'm not a big fan of cruise lines, and I think they should be left alone. I mean, RCL is my choice if you have to pick between the among the cruises, but in general, I would stay away from cruise lines. Okay, so ZM. Zoom Video. Zoom Video said that it's planning to transition to partner only model in China, so no direct to consumer sales, only through a third party, starting August 23rd. But in my opinion, it's a pretty good move by Zoom Video because they just want to stay away from this political turmoil that's going on and this dispute between US and China. So I actually think it's a good idea by Zoom, and maybe if shares drop a little bit lower, closer to $250, I would be interested in to buy this. Intel. So Intel had a rough week. So after reporting earnings and announcing the delay of its 7 nanometer chip, chief engineering officer leaving, but this is actually this is the best time to buy this company because after a huge drop, like 30% drop, stock is trading very low in my opinion. RSI is in 20, so I think this is a good swing trade at this point, and shares are higher pre-market, and I would be actually buying Intel if it drops under $48 or even like $48+. I would be interested in Intel. Okay, that's it guys. Don't forget to subscribe to my channel and click the like button, and I'll see you Thursday.